Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I welcome back you people for the Tracking the Forex Market Together Part 2. I have done the Part 1 between 9 and 9:45 GMT and now Part 2 between 14 and 14:45 GMT on 23rd of December. So I'll just review the live market quote page, what you have seen during that of the European session, and also what sort of trading decisions we have taken and what happened to the trades. I'll explain it. Then also explain what happened to the highs and the lows of each pair we have watched. Then I'll give certain trades for the gap time. So let me give the link for the live market quote page. I'll focus the camera over that of the live market quote page. Okay. Now you should be able to see the live market quote page. Currently, Euro is trading around 1.304951. And initially, you would have seen during that of the Japanese and the European session, the low was 1.3047. They just briefly dipped below it by 2 pips and then subsequently gone above during that of the gap time. So now this is the gap time from 14 GMT up to 14:30 GMT. So let us see what sort of moves they are doing it. The exact opposite we should be able to see it during first 30 minutes of that of the session, namely the US session. In the case of GBP, it is currently trading around 56.80, 56.84. 56.71 was the initial low, and they breached the low during the European session and came down to that of 56.65 and went up. And now, during that of the late European session, they came closer to that of 56.65 and went up, and without breaching the low, and that is referred as a false move. Then they went up by about 25 to 30 pips. In the case of GBP Euro, they made a brief downward stop and gone up in 30 minutes above that of 30.47. I'll explain with the help of the chart for the benefit of those who are asked to show it figuratively using the chart during the course of this particular talk. Then yen is still making the subdued moves, and USD CHF, it was having the initial low of 93.45 and then came down a little bit by about 9 pips, 93.36, and then it has gone up, and 93.65 was the initial high, and they breached the high and gone to 93.76. You come across 7 pips positive net change. But in all, you find subdued moves because the net change is just 3 pips, 4 pips, 8 pips, 7 pips, etc., indicating subdued moves are happening throughout the day, especially during Japanese and the European. So let us see what they have in the card for during the US session. And in the case of Canadian dollar, it is just hovering around between the low and the high, and they are not breached the high or the low in the case of Canadian dollar also. And in the case of GBP, Euro GBP, the cross which I have taken a position, I was telling you 83.39 was the high. They made a brief upward stop to 83.43 and came down and breached the low. 83.28 was the initial low. They breached and formed 83.20. So we are able to understand by referring to that of the net changes of Euro and GBP, this is the move they are going to do it. That is why even at the lowest level, I was trying to take a sell position, and it was closed with a nominal profit. And in the case of Euro CHF, they are holding around without much of the move. And in the case of yen crosses also, I have taken the position, but they are closed with stop at entry because they have not made any big move either on the upside or on the downside. So let me just go back to that of the PowerPoint presentation and explain to you what are the positions we have taken and what happened to those positions. I'll go back to that of the European session slide. So I kept a buy order in the case of Euro. 1.3047 was the initial high. Initial low, I kept a buy order at 1.3050, and that was not filled. So I modified after about 30 minutes to 30.62. When Euro GBP was filled at 56.74 and came down to 65, it was not hedged. At that time, Euro came only to 30.62, so I took a buy position there after modifying for about 12 pips. and then kept an entry stop hedging order. Then afterwards they just went up, but they did not breach the high. And I know that the gap time has to start from 14 GMT, and the late session they are expected to go higher, but they did not go above that of the high. So immediately I closed the position with 18 pips profit after keeping stop at entry to start with. Then in the case of GBP, they went up to 56.95. Then I closed it around 56.92 with the 18 pips profit. And all subdued moves, only very little profit, similar to that of scalping. Then I kept a buy order in the case of USD CHF 93.45. I was taking buy in all. You can understand that I was expecting the contrarian moves to happen in the market, and that is why in the case of CHF also I took a buy, and I kept a buy limit order that was filled. They came down to 93.36 also subsequently. Instead of keeping a limit order, we can just watch the market and take a buy also. Provided you are able to understand the type of moves they are doing it, I'll explain it again with the help of a chart so that those who are familiar with the charts might be able to benefit out of that, and closed it with a profit at 93.59, and afterwards by 14.2 GMT they breached the high 93.65. Anyhow, I closed it with 14 pips profit. And in the case of GBP and Euro Yen, it was making a nominal profit. I kept stop at entry when it was making about 10 pips because the moves were very subdued, and closed with stop at entry. So not made any loss or a profit. And in the case of Euro GBP, I kept a sell limit order 93.39. That was the initial high, and they breached it by about 4 pips, went up to 83.43, 4 pips. Then subsequently came down around 83.28. I closed. Then they formed a new low, 83.20. So this is how the trades have been closed. So we have to watch the market carefully, understand the type of moves they are doing it. What is the momentum you come across in the market? Accordingly, if you try to take the positions, then you will find really we can trade with an interest, understanding the type of moves they do. Otherwise, you tend to get the uncertainties, and those uncertainties might induce you to do wrong trades. So let me go back to that other slide again. So the session timings, I explained it during that other part 1. So during the European session from 9 GMT, we had taken a position. Before 14 GMT, I closed the positions because the late session, they did not gain the level. And I know that they wanted to just make a downward move again before making further rise. So now we are in the gap time. 14 to 14:30 GMT is the gap time before the start of the US session. US session starts by 14:30 GMT. So now we will watch again the live market code page, identify the type of trades what you can do. Before that, I'll briefly rush through that of how exactly we take the trading decisions. So we normally identify the sessions using the GMT time frame because it's a global time frame, universal time frame. So you can communicate with anybody with a GMT time, then it is easy for others to understand even though they are located in different country or different time frame or time zones. Then you find the gap time between the session. Then the session start 1.5 hours from the start of the session. Late session is 1.5 hours from the towards close of the session, and in between is the mid session. During the session start and close time, they are very active in making moves in the majors and the commodity pairs. During that of the mid sessions, they handle the crosses. So if we know that during the mid session we want to take the position, better focus on the crosses. And during that of the start and the end of the session, better focus on the majors so that you'll be able to capture some profit. Then we use the live market code page. As I said, it is very similar to that of the tick chart so that you'll be able to actually see the market move. How exactly pip by pip they gain or lose, we'll be able to identify. And instead, if you want to use the chart, then we may have to go for a 1-minute chart or a tick chart, and that will be unwieldy, having a lengthy frame. I'll show how exactly 1-minute chart we have to watch by referring the current market levels to that of the initial lows and the highs. Then we identify the initial lows and the highs between 2:30 and 3:30 GMT. And if you are using the chart, otherwise if you are looking at the live market code page exactly by 3:30 GMT, you can note down the initial low and the high, what you come across in the live market code page. I'll just focus the camera over that so that we'll be able to see that. So now you come across the low 1.3044, but subsequently earlier it was 1.3047. Just 3 pips they have made a dip during that of the gap time. So gap time moves are false moves. So when they dip, they intend to make a rise during the session. So we can take positions accordingly. You have seen that how exactly they gained initially and then made the dip. And in first 10 minutes, we will be able to understand what they intend to do during this particular session. So that is how the low and the high can be referred easily in the live market code page. Otherwise, in the chart, we may have to move the chart from time to time and see. Once a position is taken near the low, we take a buy. Near the high, we take a sell. If they don't breach the high or the low during start of the session. But during that of the gap time, we watch the market for about 10 minutes during the first 10 minutes of the gap time of 30 minutes. And if they make a dip, then we take a buy. If they make a rise, we take a sell. Then see in first 30 minutes of the session itself, we can close it with a nominal profit. So let me, in the event if they breach the low or the high, I explain to you what are the type of moves they intend to or they try to do on a daily basis. They do the stop ends during session start and session close time, either below that of the low or above that of the high. Now we are seeing in the case of Euro, they have just made towards close of the session as downward stop end. And in the case of GBP, you would have noticed that 1.5665 was the low and they came up to that of the low and not breached the low and went up. That is a false move. Then extended move, it is a move below that of the low or above that of the high. They hold the market for 2 hours after that and continue to cut the high, new high for about 1.5 hours. And the last 30 minutes, they don't breach the high, new high formed or don't breach the new low formed. Then reverse the market. Intentional move, it happens for about 2 sessions and the early part of the third session. If they continue to drop, sometimes you would have noticed that market is making 100 pips net change drop and then it continues to the next session, the third session starts. Then if you try to sell, you will be caught after the drop because the third session they pretend they continue the drop and then reverse. So this you have to identify that intentional move, either it's on the downside or on the upside. Extended stop end is a move, they do it for about 100 to 150 pips on the downside or the upside very quickly in a matter of about 30 minutes to 2 hours and then reverse the market from where they have started. And this sort of thing, they do it for the data release time as a, when the data is released, they use it as a market trigger and just make a downward move quickly. And last time, non-farm payroll, they did a similar way and went up quickly. So once you identify that move is extended move, wait for 2 hours. Later on, you try to take a sell position when they stop cutting the high, or you take a buy position when they stop cutting the low for last 30 minutes of their observation. I'll show it in the chart again. Intentional move, you have to allow the market to fall. Only then you can buy. Otherwise, you can continue to sell, and the third drop, during the third session drop, you should accumulate or buy back again and turn long. So this way, if you try to identify the moves and take positions, you find that moves are really helping us to take trading decisions. So in this session, Euro and GBP are expected to swing and firm up during that of the US session. At the gap time, they are making a dip. So let me just give 1 or 2 trades for the gap time. Euro, it has breached the low 1.304244 or the current levels. Just breach the low by 3 pips during the gap time. So we buy market. With an entry stop of 30 pips. In the case of GBP, they have come closer to that of the low 1.5665, but still they are not breached it, so we'll buy. with an entry stop of 30 pips because 10 minutes is over and they just made a dip and they are not breached. And we are keeping a entry stop to limit the risk for 30 pips. And once the position makes profit, we'll keep stop at entry and try to trail the stop. Once it makes about 15 to 20 pips profit and try to close it in the first 30 minutes of the session. And since the gap time moves or false move, let us see when they are dipped during the gap time, whether they are rising it during the session. So I am just giving the trade only in the case of Euro and GBP. And now I'll explain with the help of the chart, how the moves can be identified. Because there was a question pertaining to that during that of the part 1. So now this is the chart I had just taken out from FX Trade. You can see that it's a foreign exchange live chart. And I wanted to explain from the start of the day how exactly you can do it. It's a 1 minute chart. I taken it Euro USD spot market. And 23rd of December it started. Then we note down the moves here. They make the initial high and the initial low by low and the high around 0030 GMT. Quickly make an upward move and a downward move. Then afterwards, they stabilize the market. So it's a 1 minute chart, so it will take a longer time. Then it is 2 o'clock. So let me move the chart. Then only you will be able to understand how they are making the moves in the market. When I move it, we come across here 2:30 GMT and 3:30 GMT. So around 2:30 GMT, they set the low 1.3047. So when you look into the chart, it is showing 1.3065. Actually 1.3047 was the low, but the small line downward, because it traded very briefly, so it takes the average of that level and try to give it as 1.3065 to see that. So that is why I ask you to look into that of the live market quote page. This is only a 1 minute chart. Even there it is average. So briefly they just came down to 1.3047 and quickly went up. That is why it is not being shown very clearly. Okay, now you find that, okay, around 240 GMT, there again the open, close, lowest, the close was 1.306566. Okay, then this 23rd, and afterwards they formed around 3:30 GMT, the high. So here is the high, 1.3077. Okay, 1.3072 shows, but it went up to 1.3077. So you find the last 1 minute trade is being averaged and the spot is given. That is why you don't exactly get the initial low and the high in terms of pips. So when I know from that of the live market quote page, 1.3047 is the low. When they make a downward stop, and I understand, but here you don't really understand what it is, and you only look into that of the candle formation, whether they will form the similar moves. Now let me move the chart and show you. So anyhow, this is the low and this is the high around that. So they made the swing between the low and the high throughout. And here again, during that of the 4:30, and here around late session, they started becoming active here. 6 GMT onwards, they become active. On the downside, they made the drop, and on the upside. So during the late session, you find that they are active in the case of Euro, and then subsequently, they just stayed around that of the high from that of 6:35 GMT up to 7. 30 GMT. So here the late session moves are seen, and during that of the late session they made an extended move and went up to 30.95. Okay, so above that of the initial high they went up, stayed for 2 hours and then dropped it again. Then afterwards the gap time move between 7:30 and 8. This is 7:30 and 8. You find that they made an upward move, and during the start of their session they came down. So gap time, upward move, a false move, then during the session they made a downward move, again came down to that of the low. So actually they came closer to that of 30, 1.3062 at that time. That is where I picked it up around 9. Then afterwards, this is the level, 3062. So when I was giving the webinar, and it was slightly higher and then came down, then GBP also came down, but this is only Euro chart. So you find that they came closer to that of the low and again started going upward. So this is again a swing here between the low and the high, no significance. And then they went during that of the mid session, a small upward move to 82, and again they made a swing to that of the low and to that of the high. This is where I booked the profit afterwards, because they did not go beyond that of the recent high, 1.3095. 1.3095 was the recent high in the case of during that of the European session. They did not go above that. So 1.3095 is here. So somewhere here. So when they are not gone above, they simply I closed it with a nominal profit. I know the session closed. When they are not during the late session gaining it, they have to make the drop. So 14 GMT, they made the drop here, and now we are at that particular session. So what do you come across here? An extended downward move and an extended upward move and an extended downward move, and it becomes intentional for more than 2 hours. And now the gap time has started, 14 to 14:30 GMT. So initially they made a drop for about 10 minutes and started gaining the levels. Then 14:30 the US session starts, so you might see that it is coming upward, and before 15 GMT we have to close the position. So they might come up to 1.3065 or 75 and things like that. We have to close it. So this is how we plan our trade. Just take the buy during that of the gap time in case if they drop, and try to close it during that of the first 30 minutes of the session. We have to watch how far they are coming it. Now you find 1.3047. There is a low. They have come up to that now. And if you see in the live market code page, you can understand. Then gradually they are expected to take it upward. And then they have to necessarily make the swings between the low and the high, initial low and the high. And only then they can make an upward move or a downward move. So they have to pretend every time that they wanted to rise and suddenly drop. They pretend as if they are going to drop and rise. So this is the cunning method by which they try to earn from that of the traders. That is why I always say that when they try to gain quickly, don't jump into it. You might be the last buyer. Afterwards the market might drop. I think I explained it with the help of the chart because of the demand. Let me go back to that of the PowerPoint presentation. So here what I have taken at 1.3044 and 1.5671, and we are just making only a nominal move. As such, during the session the moves were not very significant, so gap time move is also not very significant at the moment. Sorry. Let us watch during the course of the time. So let me answer to that of the questions which are asked here, because last session I could not answer to the questions, many of the questions which are asked. So I'll just take my questions. Meanwhile, I'll focus the camera over that of the live market code page. Okay. First question, Umrahi, what are numerator and denominator currencies? See, in the case of the major Euro USD, GBP USD, you find the currency Euro is in the numerator of a ratio. Euro divided by USD. Then you come across the ratio 1.3045. So Euro is a numerator currency. USD is a denominator here. It's a common currency because of the majors. But in the case of USD Yen, Yen is on the lower side, the denominator side. USD is on the numerator side. Then it is referred as the denominator currency. Euro, GBP and Australian dollar are numerator currencies. USD Yen, USD CHF and USD CAD are denominator currencies. Hope you are able to understand. Because the inverse is expected by the market. When Euro goes up, normally the traders expect USD CHF to drop. So, thereby USD become weakened against all the majors. Otherwise, the opposite could be the other currencies might be falling. That is, Euro USD might fall, GBP USD might fall, Euro Yen will go, and USD CHF will go. Then it is referred as USD gaining move. On certain occasions, you come across the numerator currencies and denominator currencies fall. For example, here, Euro has come down with a negative net change of 4 pips. GBP is with a 6 pips negative net change, and USD Yen with 9 pip negative net change. When Euro and GBP are showing USD gaining move, USD Yen is showing USD weakening move. So they are showing USD gaining, Yen is showing USD weakening. This is referred as a contrarian move. So if you understand the numerator and the denominator, then it will be easy for you to understand when they are doing contrarian moves, why they are doing contrarian moves. The contrarian moves are made mainly to handle the crosses. Otherwise, the crosses will not make any moves. Say, for example, Euro GBP is a cross. Here, it will not make any move, up or down move, if both are falling together with the same amount of pips and both are gaining with the same amount of pips. Then nothing will happen to Euro GBP. But suppose, for example, Euro is gaining, GBP is dipping more. Then you find the denominator comes down, the numerator goes up, the ratio goes up. It's a simple arithmetic. So then the ratio, when the denominator value becomes less, the numerator value is stable or static, then the ratio goes up. If the denominator value goes up, then the ratio comes down. Suppose you have 1 here. 1 divided by 1.2, you come across the ratio. Then instead 1 divided by 1.5, then the ratio becomes lesser. When the denominator becomes more, then you find the ratio falls. So that is how you have to identify how exactly these crosses are expected to behave during this. And if you simply or exclusively study only that particular cross without understanding what is happening in the case of Euro and GBP, then it might be a misguidance. Okay. Then high and low mean early high and the low or session high and the low. You can just refer to that of between 230 and 330. I showed it with the help of the chart. They first form the low and later on the high, or the high first and later on the low, and that we take into consideration. And exactly 330 from the live market code page, you can just note down the initial low and the high, and that is being used as a reference level by that of the players throughout the day. So we also take it, that's all. We won't be understanding what is the rationale behind it. So if the spread of a pair is less than 40 pips, we don't consider the pair to trade. Yes, you are right. If the spread is less than that, say for example in the case of Euro Yen, the Yen, the spread was less than 40 pips. And if we take a position, we don't get anything out of that. probably 1 pip you would have earned or stopped out at entry. Similarly, Euro CHF, I was showing you, the spread was very less. If you would have taken a position, nothing would have happened. Probably about 2-3 pips you would have earned. That is why avoid such currency when the spread is less. And today, it's a penultimate day before the Christmas. So obviously the volume has come down, I suppose, because of that they are making subdued moves. Otherwise, in a normal day, we will be able to understand. If the spread is more, we will be able to easily book profit. Okay, Anil, you don't use the chart. Yeah, I explained it with the help of the chart. Now, probably you should be able to understand the different type of moves, what they are doing it in the market. Then Vinay asked, can you please go over to the hedging strategy for breakout trades? Okay. Let me go back to the PowerPoint presentation. Okay. Suppose if they breach the high, or the initial high and the initial low I set, and I explained to you 3:30 GMT, they set it. So Euro formed the initial high 1.3095, and we can keep a buy limit order above that of the market. But if you keep a normal buy, the platform will not accept. The platform which has got the hedging facility, you can place an entry stop order. That entry stop limit order can be at 1.3105. In case if they breach, immediately your order will be filled, and when they quickly go up, you can keep stop at entry and try to book profit and that. That is what I referred as a breakout trade. Similarly, on the downside, and 1.3047 was the low, and then you can keep 1.3037. You can keep a sell limit order. And in case if they breach it, and quickly you will be able to see that you can keep stop at entry and book profit on the downside. Picking original position, we can straight away use the hedging order to do the breakout trades. That's what I referred it. Let me go back to the live market code page again. So just refreshing the live market code page. Okay. Yeah, that mistake I corrected. Then okay, they are the questions now during the first session. Yeah. Okay, now there are some more questions in there. Yeah. What is USD-CHF move for year end? USD-CHF is expected to gain more level. They are shown up to 0.95. They might close it around 0.97 or 98 area. Next week is there. Suddenly you could come across some good moves as the year end moves. And I was expecting from this week, but still it is disappointing. They are holding around the same level. And they have to necessarily do it, because they have to make active market moves during the next year. Then Phoenix has got a question. Gold, what are the levels? Okay, gold seen that it is trading around that of 1600 level, came down briefly below 1600. It is expected to go up to 1650 area. Then in the first 2 months of 2012, gold expected to move still higher, and so we might see about 1700 to 1730 area. Okay. These are all the questions. Now I'll come to the questions which are asked in this particular session. then traded. USDN, please, as looks like could make a big move up along with GBBN. Yes, USDN, they are consolidating here around 78 area now. Suddenly they are expected to make a one-sided rise. In the gap time they made a small dip and they are expected to gain. So when make a dip during gap time, they are expected to gain during the session. Now Euro, we have taken a buy, we have kept a hedging order, and they in fact breached the low 30.44. Session has started 14:30, and they made some more downward stopping for about 8 pips. Here about 5 pips. So let us see how exactly they make move during this particular session. Yeah, we are supposed to close the orders before the New York. No, we are supposed to close the order by 15 GMT. First 30 minutes of New York session. The gap time is 30 minutes, 14 to 14:30 GMT. Then up to 15 GMT, we have the time to close it. They are expected to make the moves. Still, we are not hedged. And these are all quick trades. Time trades are quick trades. We don't carry it for a long time. Then Smith. There is no direction of the market, just range bound swing. So no use of initial position. You are right. But still, we can do some trades. Because market means swings. They have to make swings up and down. It's unavoidable. Otherwise, the market will look dead. You're pointing anything, nothing is visible. No, the pointer is seen, I think, in the live market code page now. Then, Hamrahi, gap moves are always contrary? No. Only during that of the trending time, the gap moves are false moves. And during that of the trend reversal time, that is the first week of the month and the last week of the month, gap time moves can vary. Only during trending time, the second and the third week, gap time moves are false moves. So we should close our position after half an hour start of the session. You are right. We'll try to keep stop at entry first and try to close it. The SNX. What about Australian dollar? Australian dollar could gain further levels. It has come, the low is, even during the European session, I have not taken the position. It was trading around 1.0156, 1.0128 was the low, and it was closer to that of the high. So we cannot take sell or a buy at that time when it is in the middle level. Because our waiting period will be long if we try to do that. Please explain black in live market code page. Okay, in the live market code page, when they are making a dip, that means a lower bid and the lower ask. That means they are willing to sell at a lower level, then automatically it turns red. When they want to buy at a higher level, when compared to the previous level, and a sell is also at a higher level, then it becomes green. Both the codes are from that of the players. They make the codes that way and through the bank terminals, and then you are able to see this. And once that particular code stays there for more than 15 seconds, then it becomes black. At the moment they are active. Otherwise it becomes black. The new code is not placed. So now after red, you come across green. So that means what? You have to watch it carefully. This green 1.3037, then followed by 1.3039, then followed by 1.3041. If they continue to show, that means they are buying. And after that, they may just remove the order and sell one. But how much they gain, how much they lose, in that you have to carefully note it. Then you will be able to understand whether they are buyers or sellers. So they may just dip 3 pips, and every pip they might buy, and after gaining 3 pips, 1 pip they may dip. That shows they just do a quick circular trade and hit the stops and buy and induce the traders to sell, and they are buyers. And if they continue to drop, show red, that means they are dropping the market without any green intermediary level. So this way, you can fine tune your understanding of the market, what the players are trying to do it. Don't think that it is a big fight between the bulls and the bears in the market, and the bulls are trying to take it up and the bears are trying to push it down and things like that. To me, they are all misguidance. Then Amurahi. Now the session has started, but they have cut the low. Yes, you are right. They are just making subdued moves. But still, I'm not hedged, so we'll watch it carefully and try to do that. Looks like USDN could make some big upward moves. Yes, that's what I explained. Year end, they could normally make some big moves in USDN. One-sided moves, normally they do it during that particular time frame. And do you take buy order at Euro if it rises above 30.44? No, whenever they form a new low, when they stop cutting the new low for more than 10 minutes to 30 minutes, 10 minutes to 30 minutes, then I take a buy. And if you watch the live market code page, then you will be able to understand whether they are buyer here or a seller here or the new low level. So sometimes, ask will be at the low. 1.3035, they will keep it as an ask. And 1.3033 will be there as a bid, but the low will not be lowered. That means they are trying to threaten as if they are going to drop, and if they quickly remove and place a higher bid order, that means they are trying to hit the stops and trying to buy. So whether they are buyers or sellers, we have to understand. Once they buy, accumulate the positions, obviously they have to quickly gain the levels and exit out of that with a profit. Did not understand the first and the third week of the month. No, I said that during monthly trend reversal times, the first week of the month and the last week of the month are the monthly trend reversal times. During that time, sometimes they continue the move from that of the gap time itself. Either an upward move or a downward move, and they may just drop during gap time and continue to drop during that of the session as well. So that we have to monitor carefully. And you have to read, fine tune your reading, only then you can enter into the market. Then what about EDUC? What about position trading? When it is the best time to take orders? So position trade, normally you can do it during the second and the third week of the month. First week, it's a trend reversal. Either they suddenly gain and drop or drop and gain. The reversal happens as the monthly reversal moves. And second week, you know that the trend is set. The first day of the second week, they will make the false move. So if they drop on Monday, then Tuesday onwards, they could rise. Sometimes they just extend it to Tuesday also. And that I have been explaining it in Asian session live market analysis on a daily basis. So if the volume is low, then they may take 2 days to make downward stop and before making a rise. And there are days wherein we have seen that false move continue till the midweek, and then afterwards they rise from it. So you have to read it and see. The forecast is one which only gives us a guidance, or it explains to us what could be the possible trend. It can go wrong also, but fine tuning of the market reading is very essential, and also still we can commit mistakes in the fine tuning of. That is why always while trading I use the hedging order. Without hedging, I don't take any position. Hedging order, I don't take any position. Because protecting our equity and limiting our risk are vital aspects in trading. So we cannot unduly take risk and later on try to do crisis management. Should we expect more USD weakening move in Australian dollar and New Zealand dollar next week? Yes. Yeah, the dips are buy opportunities, definitely. You know that Australian dollar, they came down closer to that of 0.99 and even briefly made a downward stop to 0.9896, then started gaining the levels. Euro and GBP, they are holding it because they wanted to drop Euro Aussie and GBP Aussie, because Australian dollar gained, showing a positive net change, whereas Euro and GBP are showing negative net change. This is mainly to handle the cross Euro Aussie. And also these three currencies, Euro, GBP and USD Yen, are showing negative net change in order to handle the Yen crosses. So Euro is making about 13 pips negative net change and CHF is making only 18 pips positive net change. You find it is staying around that. And Euro is making 12 pips negative net change. GBP is making 25 pips negative net change. You find Euro GBP is coming down. Sorry, is gaining because GBP has fallen more. When the denominator comes down with a lesser value, the numerator stays there. Then you find it goes up. It came down to 83.20, then it has come to 83.27 now with a positive net change. In the start of the session, we have seen it was in the negative net change. Then afterwards, they are expected to go up to that of 83.39 and drop again. They build the sell position and then let loose the market. That is why they consolidate like this. The CHF is increasing now. CHF weakening move, yes. Then Phil Fib. What is your year-end view on stock markets? Stock markets are expected to gain. Oil is also expected to gain for year-end. Probably it may close around 101, 102 area. How can we know what is the volume? See, the way in which they are making the moves, you can understand the momentum is very less. Which indirectly, see, players are here making the move in order to earn money. By simply showing Euro at 1.28 or 1.32, nobody rewards them. They have to necessarily make swings and confuse the traders, create uncertainty, and try to earn when the traders make distress moves or distress trades. So that is how they try to earn money. When the volume comes down, there is no point in making swings in the market. Then they make subdued moves. Now traded. Are the moves down in Euro and GBP setting up US session to close lower today? They cut the low in the first 30 minutes. They breach the low. And if they come above that of the initial low by 15 GMT, then we can understand it as a downward stop and before rising. If they don't go above 30.47 and 56.65 in another 12 minutes, that means they wanted to continue it on the downside. They may do it for 2 hours, then later on revise it during the late session. So you have to understand whether they are doing a stop hunt here or an extended stop hunt or an intentional move. Stop hunt is only for 30 minutes in relation to that of the initial low, and extended move is for 2 hours and they have to come above that of 30.47, and intentional move not to retrace to 30.47 and continue to dip. For more than 30 minutes, if they keep below that of the initial low, then they are expected to dip further down because more selling pressure will come to us close. So let me go back to that of the PowerPoint presentation. Time is up. So I have taken a position 1.3044 and 1.5671. They are making loss at the moment, but still 30 pips below the hedging orders are there. And if they are hedged, then I'll review it whether they are doing extended move on the downside or an intentional move on the downside. And that is the case that I'll close the buy position and try to book profit on the sell position. Otherwise, as a typical gap time trade, I'll close it with a nominal loss by 15 GBP. Okay, this is how the understanding is. So it is not necessarily that we should hold the position until we make profit. So we accept when the loss is very small. So let us see whether they are gaining because the dip is very slow. So I'm just waiting for the small pullback around 15 GMT. When they come above that of the initial low, I'll try to close it. So I take this opportunity to wish you all and also the FX Trade team very happy Christmas and prosperous New Year. And because of the demand from that of various visitors of the webinars, I'm going to give on 20th January forex market forecast for the year 2012. So I'll be giving it in two parts, and the link are all displayed under the schedule in FX Trade webinar schedules. If you just click, you can see part 1 is on the 20th between 9 and 9:45, and part 2 on 20th January between 16 and 16:45. Instead of tracking the forex market together webinar, I'll be explaining the expected market moves for the year 2012, and part 2 I'll explain in what way you can make use of this particular long-term forecast. It is not for the daily forecast, daily trades. It is for the long-term trades like currency conversions, etc. I'll explain how people can really make use of the long-term forecast. And if you just do a paper trade and see 1 year whether you are benefited, then probably you can make use of it. Because normally people derive the forecast from that of the chart, from the year-end close, then continue the channels and say the market could go up or down, and the trend reversal are not foreseen beforehand. Whereas in my algorithm, I'll be able to give the expected trend reversals during that of this particular time frame, following the time frame. Now I have been explaining on a daily basis in the Asian session live market analysis webinar that till March of 2012, Euro and GBP are expected to gain considerably, and afterwards reverse and drop during the month of April and May. So this sort of reversal points, the forecast I'll be able to give it, and if you could make use of it and try to do the currency conversions, buy now and just hold it and convert it back to, so convert, now when Euro is weak, convert US dollar to Euro, then afterwards in March, convert back to that of US dollar, you will have a substantial profit, and there is no risk involved in currency conversion trade because you don't take any leverage in that. You can just ask the bank to open the account from US dollar account, you just transfer it to Euro, then transfer back to that of the US dollar account. After negotiating the commission for the bank, you'll be really benefited, making about 1,500 pips on that. So those who have got surplus money who can do this sort of trades can make use of the long-term forecast. So I take this opportunity to thank FX Trade. This is the year-end time. This is the last webinar as far as tracking the forex market together is concerned with regard to this particular year 2011. I will come back from February onwards with more tracking the forex market together webinar with more ideas how exactly the traders can understand my trading system. And you people who have come here to listen to my webinar patiently, and every time I wanted to give some new ideas and things like that so that it is not boring, so you can really learn from this particular system and simplify your trading understanding. Thank you one and all. See you on Tuesday with yet another session of Asian Session Live Market Analysis. So next week I'll be giving the Asian Session Live Market Analysis on Tuesday, Wednesday and Thursday. Please join. Thank you one and all. See you.